G'day Peter, how are you?
Good morning.
Very well, thank you. Thanks for having me.
And it's been a happy new year so far for the ASX. Can it keep it up and what's driving it?
It's been a happy new year since the beginning of December, and that's continued into the beginning of 2017. And I think that will continue until Trump is officially inaugurated on the 21st, and then there's a little bit of a sit back and reassess what happens now to markets. So ever since the outcome of the US elections, the markets have been rallying. Interest rates have been rising in the United States. That happened at the beginning of December officially to the cash rate, and I think the rest of the world reacts from February onwards.
We've seen similar movement with the Dow in the States. I mean, what are the markets thinking? What are they basing it on? Rising rates, better growth policies under Trump?
So the Dow is a collection of stocks of the largest companies in the world, and stock prices rise when there's expectations that the earnings of these businesses will rise, and earnings rise when the economy is strong. And that's really underpinning this increase in the stock market and in the oil price, in interest rates from very low levels. There's an expectation that we've now been in somewhat of a lull since 2008, 2009. Things are starting to become better. Things have improved in the United States, and the expectation is that'll translate to the rest of the world. The earnings of these large US businesses will mean more profits, and that's why the Dow, for example, is just shy of that 20,000 mark. It's at record high levels, and this is the largest index in the largest economy in the world.
Are there any causes for concern, though? I mean, recently, of course, we've seen, less than, anticipated retail figures, for instance, for some of the major retail outlets in the US. And the figures have, jumped up and down a little bit as well, haven't they? So it's not
very
100%.
interesting. It's amazing you touch on that point, because if you have a look at the traditional retailers, their numbers have been okay. If they beat marginally, and if they disappoint, everybody says, oh, this is more of the same. But businesses like Amazon, for example, are just going absolutely gangbusters. They're up multiples every single year. The stock price continues to grow. So what's happening in the retail space is that you have one or two very, very strong names, and everybody else is being left behind. Everybody else is being left behind as a loser. And that's why the technology index in the United States, the NASDAQ, has continued to rise, because the winners are winning by so much that they're leaving everybody behind. And the NASDAQ is outperforming the S&P 500, which is 500 of the largest businesses, but your more traditional businesses, your more traditional retailers. So it's very interesting, we sit down and we talk about these trends, but then within these trends, there are huge winners, and those huge winners are really shooting apart all their competition.
One of the risks, I guess, is the talk of a trade war between the US and China. We're going to talk about that a little later in the show, but yeah. Is that something the markets are factoring in, and what would that mean?
I think the markets aren't sure. And I think what's happened ever since the election result is everybody's sitting back that was dismissing that, now starting to think, okay, if this happens, how will it happen? What does it mean? And it's reassessing really the competitiveness of each country. Whereas it was off the table, it's now on the table, and now what does it mean? It's going to be very interesting. I think there's definitely a mandate there for the Trump administration to at least do something. I don't think they can do nothing. I think they will push the envelope, and I think they'll wait to see what the political fallout will be, and then reassess. But I think what you can see is definitely a continued push in US manufacturing and in the investment of US infrastructure. And it's not just me saying it, it's the market saying it. So anybody can come and make a political statement. What I look at is the numbers. And the numbers are where everybody puts their money where their mouth is. And that's why the stock markets have been so strong. They wouldn't have been strong if people thought that this won't happen. And I think it's being priced into the market now that it will happen. What that means for politics, for sovereignty, for all that other non-financial stuff, I'm not too sure.
All right, well, what can you read into the first trade surplus for Australia since 2014?
We're actually coming through an interesting time in Australia, because ever since 2012, commodity prices were shot to bits. If you have a look at our largest exporters, it's energy, iron ore and coal, and they were absolutely annihilated in terms of price. And that's why places like Perth, for example, and regional Queensland really felt hard in 2014, 2015, 2016, the game started to change. And we now come into 2017 with more optimism. The oil price is hanging in there and improving and nudging higher. Iron ore prices are firming and they're holding there. You know, thermal coal prices have improved. And there's a sense of optimism now in Australian mining that hasn't been there for a couple of years. It's not all out boom time optimism. We're not having the huge amount of investment into building these things that we did from 2009 to 2012. But things are okay, and that's reflecting in our trade surplus, and I think that will also reflect in our currency. I think the Aussie dollar is starting to firm. With the US having now increased rates, I think the Aussie dollar will start to firm for the first half of this year. So if you're going overseas, good news.
Peter, thank you very much for your time.
Thanks for having me. Thank you very much.